What is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining on this Friday night. A little different than normal. Normally we're doing the Saturday mornings, but got some stuff going on. So I wanted to make sure we still got this out for everybody. So appreciate everybody. As you know, chat's open on both. Make sure your X is running. Yep, chat's open both on X and on YouTube. And as always, we'll be going through everything that went on, the overall market, industry groups, stocks, any other questions that you guys have. Get everybody ready to trade for next week. It has been a chop fest. It's the only real way to put it. I got to come up with a better word because everybody uses chop fest, but just been, whipping around. And we're going to talk about everything that went on, look under the hood, and get everybody ready to trade for next week. So without further ado, it's time for the Rapid Review. All right. As everybody knows, informational, educational purposes only, not financial investment or trading advice. All right, uptrend. We are in it. However, extremely choppy. Intraday, extremely choppy. Gap downs, gap ups, moving all around. It's definitely just been really choppy. That's the only way to put it. With distribution, we're looking at 5 on the S&P, 7 on the NASDAQ. We jump over and look at the distribution day tracker. And as many of you know, my distribution days are going to vary a little bit from S&P, but you're getting the gist of it. Most of the time, it's just due to their volume, slightly different than my volume. Every platform's got different volumes. I try to look at a bunch of different ones and then come up with a consensus on if it is an actual distribution day. But the big thing, looking at the distribution this week, we did have some days drop off. We gained distribution on the NASDAQ 3 days on Wednesday, Thursday, and Friday. Wednesday was a stalling day, and then you had Thursday and Friday. The S&P dodged a lot of distribution days this week, but did catch one today on the 30th. So that brings us to the count that you guys see here. But this 3 back-to-back distribution days, definitely not a great sign, especially as we look at the charts and kind of talk about what went on. But there you guys have it in terms of what we're looking at in terms of distribution. For the week, the S&P was, never changed that color. S&P was up 0.34%. NASDAQ was down 0.17%. Dow down 0.42%. And the S&P for the year up 1.37%. NASDAQ up 0.95%. Dow up 1.73%. All right, looking at the moving averages. So there you have it. Still green on the S&P, but the NASDAQ red on the 10 and the 21, Dow red on the 10 and 21, Russell red on the 10 and the 21. So let's jump over and take a look at what's going on with the indexes. We'll start off on the NASDAQ as we do always, zoom in a little bit for you guys. So just to start off, let's get some context of the week. Here we go. We ended out last week. Things were looking positive the way we ended, right? We definitely had a lot of volatility last week. Pulled back, gapped down, then quickly kind of saw resistance, then recovered. If you want a full breakdown of last week, you can watch last week's episode. But coming into this week, things were looking kind of positive. We were above the 10 and the 21 to start, and we kind of had a good, strong start, right? You have Monday, Tuesday, and Wednesday. So Wednesday, we had this big gap up, really big gap up, right towards those all-time highs. And I had been talking about during the week in Discord, and I might have posted on X and some stuff on Reddit as well, that seeing resistance at this point, especially rallying that quickly off of those bottoms, somewhat expected, right? I didn't think we were going to just completely just keep rocket shipping higher with no pause or nothing. So on Wednesday's action, that kind of stall right at the all-time highs, reversed to the lower side on higher volume. Wasn't too concerning for me, but we got that stalling day. Hey, what's going on, Brian? But where things got really ugly is Thursday and Friday. You can see we were down slightly in the morning on Thursday, and then it was just volatile throughout the day. I mean, look at where we are from high to low, breaking below all the moving averages, then rebounding to recover and get back above. So this was also kind of positive just to see us rip lower and then quickly recover to get back up. So Thursday wasn't entirely concerned. Didn't like the volatility, but at least saw that we were able to gain some momentum towards the end of the day and get back above those moving averages. Friday, we were down again, more volatility intraday. The difference here is we closed below the 10 and the 21, but we did find support at the 50. So overall, when we're looking at things, right, that was kind of just one on for the week. If you take a kind of step back and we just look at what's going on with these indexes, right? We've been in this kind of chop fest range bound. The chop fest has really probably been since over here, the beginning of October, right? Every September was beautiful. People were making a ton of money in September. And then October, from October to now, it's just been choppy, choppy, choppy. But we've been in this range bound area from basically October 29th to now, where we have the highs and the lows. The positive thing that we were seeing was just, it was originally this VCP type pattern that we were forming. And then the last 2 weeks, that has just kind of just crumbled and got real choppy. I don't like right now, as much as we are maintaining those higher lows, right? So you can see the 1121 low, 1217 low, 120 low, and 129 low if we're looking at these major lows. Good to see that they keep becoming higher and higher. Not good to see that we had the volatility starting really, really choppy, really, really wide ranges throughout the day, and then slowly kind of get tighter, 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 tighter. That was beautiful. And then the goal was now hopefully to here see us break in a direction and trend, just like we would a stock. But we didn't get that. We got this choppiness, and now we're just continuing to chop up in this area. So this is the ugly side of what is going on right now. As constructive as this pattern kind of looked in the overall index, what's been going on lately has just been not pretty. Makes things very, very difficult. If you're over trading, you're likely getting that kind of death by 1,000 cuts type of effect to your portfolio. With that being said, there are a few names that are holding up well, but in general, what's going on in the overall market is just making this a very, very difficult environment to just make easy gains. And as trend followers, we want those easy trends where we're able to buy stocks, buy leaders, and just ride those trends for those gains. We don't like this range bound choppiness at all. What's going on, Chad? So do not like seeing that. And like I said, it's really the fact that things look so constructive and in the last 2 weeks have gotten extremely, extremely volatile. What this does remind me of, and I just kind of wanted to bring this up. This reminds me a lot, not identical, but very similar to how last year started off, right? We had the end of December, and we just had this just choppiness. The difference is we weren't like kind of wedging higher with those higher lows. It was just really more of like a flat kind of choppiness through these moving averages, above these moving average. So the one positive that I do see is that we're spending more time above the 50, less time chopping around. I will say this, just because we had choppiness here and we have choppiness now doesn't mean we're due for this. It's just a comparison. If you've traded last year and you're not a newer trader, you remember this was a little bit more of a difficult environment, right? You'd make some buys, you'd probably get some traction, you'd be feeling good. And if you didn't take any of those profits, a lot of times those profits got washed out and it was just very difficult. So very reminiscent of this action that we had there. But much, much more constructive, I would say, overall with the higher lows. S&P, very, very similar action. The only difference as this loads that you're really seeing on the S&P is that where this is happening, where we had this kind of happening inside of that consolidation, we're having this kind of happen more towards those all-time highs. But as you can see here, the positive here is we closed above the 10, the 21, and the 50. And again, higher lows, higher lows, higher lows, and right near those all-time highs. Dow, we'll look at that quickly. Kind of see the consensus there, right? I mean, this is kind of trending a little bit better. And then the Russell. So now the Russell made a really nice move, and those small caps had been performing very, very well, rocketed up. And now I've been seeing some weakness and starting to kind of pull back and downturn, but again, still higher lows. So that's also positive to see. Other than that, I'm trying to think of anything else that we have to look at here. That's pretty much it. I mean, look, the really the only word to use is choppy. That's what we have here. And again, that doesn't mean that you're not finding traction in some names, but when the overall environment is the way it is right now for us trend followers, it's very important to just make sure that you're not over trading. It's very important to understand that those quick gains that you may make can quickly just be washed away a day or two later. It's just the environment that we're in. And until that environment changes, you need to make sure you're trading and managing your risk accordingly. All right, so let's jump over to Deepvue. As you guys, many of you know, I am a Deepvue partner. This is the tool that I use for all my stock screening, charting analysis, industry groups. Aside from the overall indexes where I look at in other places, this is where I do the majority of my trading. If you are interested, link in the description. On X, I got a link in my bio, discount code in there as well if you guys want to check this out, because I do think for the price, you cannot beat this tool. One of the things I love is my theme tracker. So this is looking at 1 week, 1 month, 3 months, and year to date with various themes throughout the market. For the week, you can see telecom, solar, the two leading groups. Oil and gas definitely showing a lot of strength. And then semiconductors was another group that we'll look at more on the ETF side, but semiconductors definitely showing a lot of strength as well. On the 1 month time frame, and what I tend to like to do with this is I can see things showing strength for 1 week, draws my attention. Then when I start seeing it moving up in the 1 month, 3 month, that just shows me that this trend may be, not just a 1 week strength or 1 day strength, kind of starting to show that it's trending for a longer time. The big things here, Bitcoin miners, semiconductors, really still showing some strength. The one thing I will say here, right, is there is a little bit of possible rotation coming into the market. It's not entirely clear yet. I know a lot of people want to say rotation, 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 we're seeing rotation, we're seeing rotation, blah, 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 blah. Rotation doesn't happen in just 1 week, right? We could see this pullback happen. That doesn't necessarily mean that industry is done, but it is starting to look a little bit more like a lot of these groups are due for a pretty big break. Profits are being taken, and money might be getting rotated somewhere else. So not entirely where I'm like, oh my God, these aren't going to lead anymore, get out of them. But more where my senses are a little heightened to the fact that a lot of these groups could be due for a good pullback and a good correction, and no longer be the leading groups. So always something that we're paying attention to. Just something that I wanted to note, because if you look here, right, silver and gold miners have just been destroying everything for a while now. That could be a rotation where we're starting to see things go into other areas. The ETF tracker. So this is my ETF list. I look at things on a daily and a weekly time frame, so I can see kind of more the macro trend here, more the micro trend over here. And we'll sort this by relative strength, comparing these groups to the S&P. We'll start off here. 90 is being good. Anything above a 90 really being good. So I try to look at the 90s over the weekend on my personal time, where I'm not eating up your guys' time. I do go through this entire list just to get a feel for what's going on. But you can see we have Global Sea, Sky Cargo, oil and gas, like we were just saying. This is starting to really, really perk up. Macro still kind of in a sideways action, hasn't really trended completely up. So this might be a group that you want to keep an eye on. Telecom trending up nicely. This has been ripping since the market turned around last year, and just continues to rip and showing some strength now. Oil services, European financials, regional banks, food and beverage, another one of those that's been choppy. Sideways action, possibly looking to, make its way. I mean, nothing that's really drawing my attention right now because we still have some highs to get to. Japan. Let's see. I don't even know what this is. Alps. Let's see what Alps is. Does it tell me? Oh, there it is. Energy, transport, storage, processing, energy, commodities. So this is more in the energy space. Energy has been showing some strength. Brazil has been up here a lot. Equal weighted on the, this is the S&P 500 equal weighted utilities, oil refineries, banks, agriculture business, AI hyperscalers, India, insurance. Manufacturing's been ripping a lot. You saw that over here. Semiconductors. All right, so this is what I wanted to take a look at, right? semiconductors has been trending very, very nicely. Did get hit today, pulled back to that 10-day simple moving average. Not entirely concerning because this has been trending very, very well since pretty much, I would say, where it really felt like, all right, we're getting some confirmation is in the beginning of the year. So for this year, the semiconductors has been performing well. You see, if you look at some of the stocks, AMD and everything, a lot of these are working towards all-time highs. So really, really keeping an eye on these. We'll say that a lot are getting ready to report, so you definitely want to take that into consideration. But overall, semiconductors are a group that I'm highly, highly interested in keeping an eye on for some possible leadership coming out if this trend is going to go higher. You got the Russell. What else? All right, we're in the 70s. All right, let's back off of that. Now let's go to the 1 month. All right, let's skip around. Uranium. So uranium right near all-time highs and has kind of pulled back right to all-time highs. You can see this kind of weekly pattern over here. Still, just because it had a bad couple days and a bad week, want to keep an eye on these uranium stocks, especially because I know a lot of this is that AI, energy type of play, nuclear. Keep an eye on this. Copper miners, Brazil, hydrogen, another group, right? We're starting to see this consolidation. We started working up the right-hand side. It's been showing some relative strength. Again, energy, AI plays, keeping an eye on this as well. Rare earth has been just, I mean, look at it on a weekly. Performing really, really well. This is one of the worst weeks it's had since the trend. Do not count this out completely, but this is just starting to get concerning. Breaking below 21, really, really high volume, as you can see over here. High volume, really big down week. So keep an eye, see if this is going to be a base forming pattern or if this is just rolling over. Bitcoin mining. So I own Hut right now, which is a Bitcoin miner. Things have been looking very constructive as we kind of tightened up and we're starting to form the right-hand side of this kind of consolidation pattern. And stand by 1 second. All right. But yeah, so starting to form up that right-hand side, we saw things starting to tighten up, and then it kind of got choppy. This is kind of concerning as it started to get choppy, and now you're seeing the Bitcoin miners break below the 50-day. Individually, like Hut's looking pretty good. We'll still look at it. I'm not too concerned where I'm looking to sell out of it yet. It hasn't hit my stop, but still keeping an eye on this group. Clean tech going into the ETFs, us with the energy stuff again, metal and mining getting hit. Gold, crushed down 10% today. Silver also was, we'll type that one. Oops, can't type. There we go. Silver getting annihilated today, down 28.60%. A lot of drama going out there with Minervini, I know too. Oh, Brian, for CANSLIM swing traders, do they just wait for growth to be attractive again, or do they take whatever theme is hot during a down period? I'd say that's kind of depends on the type of trader you are. I think most of us will pay attention to what groups are doing the best, right? Where we're seeing the strength in the market, and that's where we're going to put our funds. If the overall market does roll over, personally, I'm not sitting here to try to play a lot of defensive plays just because they are trending well. If the overall market's getting beat up, just because on the downside things get a little more sloppier and a little harder to manage. But if the overall market is performing well and the group is just not a growth group, maybe it's an oil and gas group, but the overall market, S&P is trending fine, oil and gas looks okay, I'd be willing to take trades in that. And it was funny because somebody had talked about this in Discord, and they said, it's ridiculous. IBD 50's got all these, metal stocks, silver, gold, oil. Like Bill would be rolling in his grave. Bill's probably rolling in his grave. I don't think so. And here's the difference. These metals aren't the metals of back in the day, right? They actually do provide some value to the new. A lot of these do play a pretty big role in the AI world, especially silver. And oil and gas possibly fueling a lot of this AI too. So as much as there's also some global economic stuff going on with that as well. But regardless, just wanted to kind of just make that. So it's preference, but to me, it's just is the environment good? Is the environment conducive for trading, or are we in a choppy environment? If the environment's conducive for trading and these groups are working well, then I don't see a reason not to take some trades in that. For your pure CANSLIM trader, obviously you want to see the fundamentals backing that up. So very, very personal to the actual trader. So keep that in mind. All right. Trying to think if there's anything else I wanted to highlight here. We looked over a couple of these. Lithium pulling back. So a lot of this is one of the things too. Shout out to Swizz Trader, Steve Swizz, professional CANSLIM trader, talking about in the Discord channel the possibility of seeing a lot of these leading groups and these leading stocks really starting to get hit. And that can be very concerning when you start to see the leaders starting to roll over. A lot of times that means, and the markets in the environment it means that things might be getting ready for a correction. Again, he didn't say we're set for a correction, just something to pay attention to. And again, look, we're looking at lithium, which has been a group that has done very, very well, starting to roll over, breaking below that 21 EMA. But again, when you look at the macro trend, yeah, we're still trending upwards, just a bad week, but very, very high volume down week. So concerning week, but not running for the hills yet is the way I would put it. When sitting out of the market, do you put cash in a money market to earn something? Not me personally. I put my money straight up in cash. It sits in my account, and I'm ready for the moment that the market tells me I'm ready to get back into the market. As a CANSLIM trader, I'm looking for those follow-through days, looking for that possible early trend change, looking for those leaders to start peeking their heads and breaking out of bases. And when that happens, I'm instantly into the market and at least testing it, not 100%, but I'm testing it. So for that reason, I just keep my stuff in cash. In terms of money markets, things like that, like personally, I have other stuff, other investments outside of my trading accounts. And to me, that's how I keep things separate, right? I have stuff that's outside that's just I leave it, set it, forget it, let it do its thing. I have my trading accounts. I have obviously my home, all these other investments. That's how I manage it. There's, I'm sure, plenty of other strategies and tactics that you can use, but that's just the way I personally do it because I want to just be ready at any point to be able to go and just start buying. And I don't want my money tied up in something else, or, you know, I honestly don't even know the logistics of pulling it out, putting it in, all that kind of stuff. So, all right. Let's just talk exposure, and then we'll come back to Deepvue and look at some charts. This is one of those tough things, right? Because overall, we talked about the market not making these higher lows, right near those all-time highs, but still in that range-bound area, and the volatility have recently picking up. Not the environment we want to be in. For me personally, there are some stocks I have that just haven't given me sell signals, and I'm not going to jump out of something prior to a sell signal just because of the environment getting a little choppy this week. But I am very, very, very close to all right, I need to start reducing some exposure, and it could take a day that we just have the market get hit a little bit. I'm probably going to get stopped out and start reducing some of my exposure. In this market, though, I am very cautious on my new buys. I was a little aggressive towards the beginning of the week, and then now towards the end of the week, seeing the volatility that's coming in, especially going into next week. For the most part, I'm looking to probably just sit with my hands off and let things kind of shake itself out. I have some exposure in the market. I have names that I feel comfortable in. If something really, really enticing looks really, really good, I'll be willing to take a low risk trade, but I also want to make sure that I'm not going to get overexposed. So for exposure levels for me, you could be, as low as 0. I'm not going to sit here and say you should be invested in this market. If you've been getting chopped up, if you've been having struggles, then I think maybe sometimes it's just better to sit back and let the chop roll, work itself out and not just damage your mental capital. If you have been having a few trades work, or some of the trades you have are just behaving normal, you could be a little bit more exposed. I personally do not want to be over like 75% invested right now. That's just where I'm at. I just don't think I don't want that much exposure in a choppy environment like that, and that's even with some names behaving normal. So let's go back to Deepvue. And let's go over here. So I'll show you guys what I do own because I keep talking about it. Here is HUT. I do not like this close right here below the 21, but the volume wasn't looking brutal today. My stop was at this low on 123 to stop me out. It would still be a positive gain for me, so it wasn't like I was taking a loss. I was willing to let this give a little more room, especially being a little bit more of a high ATR stock, so that I could see, I didn't want to just start selling out too quick. If I was a little overexposed, I probably would have reduced some of the position on here. Cardinal Health, the health has just been, forming fairly well. You can see this kind of, not really a VCP, but, just pattern forming here with volatility and higher lows and volatility decreasing, higher lows. This does have earnings coming up on next week. If I don't see this pop in the next couple of days, then I'm probably going to sell this going into earnings. So I really only have like a 2% cushion on this, and I'm not willing in this market, especially and in a name like this, to be holding that going into earnings. And for those CANSLIM traders asking maybe why I am holding something like this, especially with the last quarters, this group had just been showing a ton of relative strength. Yes, Brian, the earnings coming up next week. And that's what I love about Deepvue. You have these little flags here. Speaking of earnings coming next week, same day, you have BE also reporting. Same situation. Hasn't hit my stop. Trending still healthy. The 2 down days were kind of low volume. Not going to just jump out of something. But also do want to make sure that I'm able to have enough of a cushion in this name. Close on this one. But still gotta, kind of make sure that I look for like about 10% cushion, just so that if it does gap down 10-15%, I'm not getting crushed on my risk. And then SanDisk. Look, it was a beautiful start to this one, but I'll be honest, did not like the close of this day. Right, we'll jump over to the 5-minute on this one. Right, beautiful. Yeah, the gap up. Actually, let me turn this off so we can just see the gap up a little bit easier. So we had the big gap up, right? And then we just kind of rolled over, rallied a little bit into close off those lows. On the daily, we still continue to just ride that 5-day simple moving average. And that's really where my stop is right now. I'm just riding that 5-day simple moving average. If we get a close below that, I'm going to trim some. And then I'll probably look to move it to the 10 or maybe the 21, depending. But and if we get a significant break right now below like the 10, I'm just taking everything off. So just kind of being patient. I already took some profits in this one, so I'm just riding that core position and not one to jump out and lose what has been one of the biggest true market leaders of this market this year. SE, this was requested. So you have Solar's Energy. The fundamentals on this one look great, which is why I think a lot of people are requesting that we look at this one. Should have brought water up here. I did not. But clearly you see this on my spotlight list. So it's a name I've been watching as well. But my big concern about this is it's not been very clean. It's been very similar to the market where it has been choppy. Still, for looking right, very, very simple is the way I'm looking at this. We have a consolidation pattern, and we are chopping around at these all-time highs. The thing with this is that prior low is a little deep. It's about 11%. It's a little bit higher of an ATR stock. The concern I have with this one is just how tough it has been with the choppiness of this name, to be completely honest. Even if you use, let's see. Let's see if we were using the 21, because it's trying to respect the 21. You know, the 21 is where if I'm going to enter this one personally, if this thing does break out, I'm going to probably shoot against the 21. Maybe use a smaller position because it is a more volatile stock. I think ideally you want to see us take out this high, which means that you're going to have to buy a little bit extended from these areas. This is one of those, and I try to use a lot of general terms because I know just a lot of the people that watch this, everybody trades a little bit differently. To me, I'm probably just sitting and waiting in this one just because of the choppiness that we're getting. It's tough, right? I want to shoot against the 21, but I also want to see us get above this low right here. So I rather be more patient. I rather let this thing tighten up a little bit, give me a better risk entry, than try to chase this one and then just have to take in an early sell if I'm going to stick to the amount of money I want to keep risk, put a really small position, or just have to have just a bigger stop on something to reasonably sit with what is a good technical stop. So for me personally, as much as it's on my spotlight list, I'm probably, especially in this market, just going to sit and wait and either let this tighten up or let it go on without me. Next Power, perfect example of a name that went on without me after getting stopped out down here. Run, another one of these solar names, pulling back right into the 50. And Cypher, this one's kind of off. This shouldn't even be on here. We're moving this out of here. All right, I don't see any other names in here. I'll be honest. I'm definitely sitting back a little bit more, letting things kind of work out. Unless something really looks perfect to me, I'm probably not adding to any exposure. The other big thing to be concerned about going into the next couple of weeks is earnings are starting to pick up. So a lot of these names that you might be seeing might have earnings on the horizon. So if you don't feel like you're going to be able to reasonably get enough of a cushion going into earnings, you probably just want to sit back and wait. That's at least how I approach it. It also is something to note that very often stocks just kind of trade a little bit. There's less trading going on in some of these names right before earnings, less likelihood, very close to earnings, that you're going to get those big moves, but that's not entirely true. So just something that I've observed. Other than that, can I look at Lite? LITE. Yeah, this is healthy, man. This is looking good. This nice little correction right here. The attempted breakout and then squat, which is probably a lot of pressure from the overall market. So I wouldn't be surprised to see this pull back a little bit more and then break out, but I think this is definitely a name to keep an eye on for sure. Earnings, though, on the 3rd. So that's where you're going to, like, for me, I'd rather let this thing go on without me than take the risk of earnings. So, as we've seen, even some of the names that we've had, I think a lot of us have had a lot of conviction, expected some real positive reaction to earnings. We haven't got it. So keep that in mind. GV. Yep, another one, right? Trying to break out and squatting. Kind of seeing a theme here, right? These patterns, these breakouts, and then the market pushing these and down and squatting. So for those who say, screw the overall market, I know a lot of people don't really care to look at it, and they say, I just follow the stocks. This is showing some relative strength, but the overall market's having some pressure on this one for sure. APH. At this point right now, this is just getting, like, it broke out of this range. It's just getting really, really volatile and choppy. We had the earnings reaction here, breaking down back into the base, rebounding. Just, yeah, I'm just going to let this thing do its own thing. I'm not even looking to touch this until it forms a better setup. There's really no setup that I see right here. If you own it, you should have some sort of a plan. I don't know if you're following the 50-day, if that's the case. Also could depend on where you're. I really should have brought water up here. Sorry. I don't know where some of these people bought this. So, macro, right? Macro, this is still trending upwards, but there's a lot of chop coming on right here. And this is having this big gap up and then big gap down. not what I want to see in a name. All right. All right. Nothing else here. So recap, finish it all off. Look, patience. Over trading in these environments is going to get you killed. It's going to take care a lot of your actual capital in your account, and it's going to take mental capital. And then when things do turn around, if you're not in a good headspace, you're not going to be able to really benefit from a really, really strong uptrend. So be patient, right? It doesn't take much to have a great year. You can have a bunch of months where it's just choppy, you're barely trading, you're sitting out, you're being patient, and as growth stock traders, as trend followers, as swing traders, as position traders, CANSLIM, intervene, name whoever else you want to name, you can make your year with a couple stocks and a couple good months if you manage to protect your capital when the market is the way it is right now. So I understand I'm one of those people. I like to play around. I like to be in the market. I like to take trades. You have to make sure you're really, really being strict on what you're taking, and which is why I was very strict on a lot of those trades that I took. And again, also that was when things were looking a little bit better. Right now, I'm definitely more on the defensive side, and letting the market kind of work itself out and figure out which way we're trending. And if it's going to be continuing chop, then I'm going to be continuing to sit on my hands more than not. I'm sorry. I really should have brought water up here. Normally I do. I totally forgot. All right. But look, that's really all I got. So be patient going into next week, and make sure you're just really have a strong risk plan. This is not the market I would want to be overexposed in. If you have some names doing really, really well, great. But even in that side, if I had 4 stocks just ripping like crazy and a market gets like this, I'm starting to pull some exposure off, because if all those names roll over, I don't want to see my equity just go because I didn't take any profits in stocks that were performing really well and that were in a choppy environment. So, all right, that's all we got. You guys know the deal. YouTube, X, link in the description for the Discord channel. Waypoint, it's available. It's out there. There's a link in the YouTube description, so you can sign up there. I'm running lifetime subscription right now for anybody to check it out before I really, really start putting it on X and blasting out to a bunch of people. So it's really mostly been kept to the Discord channel. But since you guys are sitting here watching this, I think you deserve to get the opportunity to get in on the lifetime membership. And, we're just making sure that this thing is running, and all the first-time users are getting a good experience, and then we'll roll it out to everybody else. But so far, feedback's been good. And I personally have been using it, and it's made my life a hell of a lot easier. So, yeah, that's all I got. Other than that, everybody enjoy the weekend. I appreciate people spending a Friday night with me.